Afternoon. Let me stop it. Let me stop this one.
I have no audio.
Testing the speakers on StreamYard. Sounds like there was.
Okay. I cannot hear anything.
I didn't see the message. Yeah, but I'm asking if Facebook is up. He said I cannot. He is saying he cannot hear. Good afternoon, everyone. Can we bow our heads for a word of prayer, please? Father, we thank you for today. We thank you for your love. We thank you for your goodness. We thank you for helping our students to be prepared for this afternoon to do their presentation. Father, I pray that you'll bless the proceeding, bless their presentation, and at the end, we'll all be able to say that it was good for us to be on this platform tonight, this afternoon. So once again, Lord, I pray that you'll be with us and bless the proceeding and help our students to do well. In Jesus' name, amen.
Good evening, everyone, and welcome to this session, which is entitled or dubbed HLSCC Investing 101. This evening, we have the privilege and I would say the pleasure of allowing you to see what our students are capable of doing as it pertains to investing 101. And we are basically ensuring that they have the opportunity now to let you, the community, know what they have been working on or what they have been engaging in for the last semester and for the entire year. The basic requirement in terms of being able to be a part of this finance program is that you would go through the requisite gen eds as well as the business foundational courses, and then as you come up the ladder, you would be able to take on those upper level courses in finance. And the one we're showcasing this evening in particular is investments and securities. Also, as part of this session that we have this evening, so let me just break it down for you a bit. The students will pretty much present to you what are the foundations, the fundamentals of investing. And at the end of that interview, or at the end of that discussion rather, they would pretty much be letting you know how to engage in stock market trading. So they'll be engaged in a stock market simulation. And after that particular segment, then we would also let you have a preview or a purview of the students. They're going to be the same students, but the students now having a conversation on financial services generally, where in their class there's another finance class which is called Financial Markets and Institutions. And basically what they're going to be doing is having just a general conversation. And then coming on to the latter end, we are going to just give you a taste of what our students think about the Ukraine-Russia situation and how that may be impacting the rest of the world as well as the BVI. So I do invite you to sit back and to listen intently with from our students in terms of what they are presenting to us this evening, so that at the end of the day, if you want to ask a question or if you had any thoughts in mind in terms of investing in the near future, perhaps they may be able to answer those questions for you. If you wish to have a question asked, you can put it in the Facebook chat and we will try our very best to have those questions answered before the students finish. But again, these are students or upper level students, and they pretty much have been, I don't want to say practicing, but I would pretty much say that they have been preparing for today. Just like we had earlier today with the showcase, which was held in the LRC, one of the things that we've been doing here is not just preparing our students to get a degree, but we want them to now be able to demonstrate that they are knowledgeable and they are capable and they are competent to have a conversation generally. So I am going to go ahead and introduce the students that we have this evening are Janina Lloyd, Ryan Smith, and Matthew Murray, and they are going to be presenting for you. And I'm going to invite Janina Lloyd to begin, or I'm going to really leave it up to the students to let me know which one will go first, but I will invite Janina perhaps to just introduce the group, and then they will turn it over from there. All right, thank you. Sit back and relax.
Good afternoon, all. My name is Janina Lloyd, and I am an accounting and finance student here at the HLSCC Community College. Today, Ryan, Matthew, and I, who are from the Investments and Security Markets class, will be presenting on the topic Investments 101, but we'll be focusing specifically on the investment process. I will now allow my classmates, Ryan and Matthew, to introduce themselves to you.
Good day, my name is Ryan Smith and I am also a finance student here at the HLSCC Community College. I intend to continue my education after I finish this class and to hopefully pursue a career in the banking industry.
Good afternoon. My name is Matthew Murray, an aspiring financial advisor, currently majoring in finance at the HLSCC Community College. And today I will be assisting my fellow classmates, Ms. Smith and Ms. Lloyd, in presenting on the topic Investing 101.
So within our presentation, we will be focusing on the areas defining investment goals, security selection, security analysis, and we will also be giving you a live demonstration on how to execute a trade. So the first step within the investment process is goal creation, and I will allow my classmate Matthew to explain goals.
Well, before starting the investment process, you first have to be smart, meaning you have to have specific goals, knowing what you want to achieve. It has to be measurable, attainable, realistic, and time-based. Goals are very important as it helps you determine what you would like to achieve in the process and what type of stocks would be appropriate in achieving said goals.
So let me introduce you to my friend Michelle. Michelle inherited $150,000, and within 10 years, Michelle and her spouse had saved $100,000. Both Michelle and her spouse want to purchase this house you can see on the screen, this house, which is valued at $750,000. They both prefer to invest their $250,000 in order to generate the returns they're looking for without actually going to the bank and using a loan to finance. But the question is, how would Michelle and her spouse make this $750,000 in order to purchase the house?
That is a very good question, Janina. The way in which Michelle and her spouse can grow their money to the $750,000 would be through utilizing the principles of the time value of money. Time value of money simply means that a dollar is worth more today than a dollar tomorrow. So in order for them to exercise this principle of time value of money, they must plot their figures into the various components within time value of money. Here these components are N, the number of years, PV, which means present value, the current value of your future cash flows, PMT, payments, which are the periodic payments throughout the years, FV, future value, which is the future value of your present cash flows, and I/Y, which represents the interest per year. Here we see that Michelle and her spouse can invest their money over a period of 10 years or a period of 5 years. Seeing as the market average interest rate earned is 10%, it would be preferred for Michelle and her spouse to invest over a period of 10 years, seeing as for 10 years its interest rate of 11.61% is closer to 10% as opposed to the 5 years where the interest rate is 24.57.
So what kind of assets would Michelle need in order to make this investment?
Well, that is a very good question. There are two types of assets that Michelle could potentially invest in. But before we get any further, what exactly is an asset? Well, an asset is any item of value that you own or is owed to you that generates cash flow. With that being said, the first type of asset that Michelle could possibly consider in investing in are real assets, which are tangible, physical assets, for example, houses, vehicles, inventory, equipment, amongst others. But for the purpose of this presentation, we will only be focusing on financial assets. which are non-physical assets that include equity or stocks, bonds, and mutual funds. Now that you guys know the types of financial assets that Michelle could potentially invest in, you may be wondering what exactly they are. Well, in a nutshell, equity is the ownership in a company, and it can come in two forms, namely common stock and preferred stock. If you require more information on what common stock and preferred stocks are, please leave a comment in the chat and we will answer at the end of the presentation. We also have bonds, which are long-term debt securities, such as treasury bonds, which are issued by the federal government, corporate bonds, which are issued by corporations, and municipal bonds, which are issued by state and local government. And seeing that they are long-term securities, they generally have a 1 to 30 years maturity period.
So what is a mutual fund? A mutual fund is basically a company that pools investors' money together and invests them in securities on behalf of investors. And there are many types of mutual funds. Money market mutual funds, which are mutual funds that invest in short-term securities, which have a maturity date of less than a year. Stock or equity funds, which are mutual funds that invest mainly in stocks, and bond funds, which are mutual funds that invest mainly in bonds. What is an ETF? An ETF is similar to a mutual fund. It is a basket of security that you can buy or sell on a stock exchange. So now that we have talked about the financial assets, there are also markets that these assets can be bought and sold on, which are the primary markets, which is where the new stocks or securities are issued, and a secondary market, which are existing markets where existing securities are bought and sold. Now that we have covered the goal creation portion of the investment process, we will now move on to how Michelle and her partner can select assets.
As my fellow classmate said, Michelle and her partner must choose assets. Two ways in which they can do this are by utilizing the methods of analysis known as fundamental analysis and technical analysis.
So fundamental analysis looks at the macro and the micro factors. So the macro factors may include the political, economic, social, cultural, technological, legal, and environmental factors. So my question to Rayan and Matthew, would you rather invest in vodka stock, which originated from Russia, or a Tesla stock? And mind you, these stocks are doing well. So would you rather invest in vodka stock or Tesla stock?
Personally, I would say Tesla stock.
Personally, I would also say Tesla stock.
And the reason why they may invest in Tesla as opposed to Russia is probably because of the political situation that is going on in Russia and Ukraine. And that may bring on some systematic risk with the stock. Whereas Tesla stock, it is located in a more stable economy. Now Matthew will be explaining the micro factors that may affect stocks.
As mentioned before, Michelle would also need to focus on market factors such as the industry, the company's reputation, analyst recommendations, the company's performance, and the valuation ratios. She would need to focus on the company's performance to determine their health, seeing if they are able to meet financial obligations and she would also need to focus on valuation ratios to help determine how profitable this investment could be.
So with valuation ratio, there is this one ratio called the return on investment ratio, or ROI. And this basically measures how profitable the investment is, whether the investment is generating a profit or a loss. Ryan will now explain the technical analysis portion.
Before we explain the technical analysis portion of asset selection, now that my classmates Matthew and Janina have explained fundamental analysis, this is a way that can minimize the hassle associated with analyzing. We can use a stock screener. Stock screeners allow you to take any information that you would like on your stock and filter it, enter it into a filter, and it will filter through the various stocks to bring up the ones that will get you your desired return. Examples of stock screeners are Morningstar, Yahoo Finance, TradingView, and StockFetcher. Now, technical analysis. Technical analysis, it uses historical data in order to assist in making your trading decisions. The types of data we can use in technical analysis include charts, trend lines, which connect a stock price movement to show you the general movement, whether upwards or downwards, and the support and resistance lines. Support lines show you where the price has a difficulty falling below it, and resistance lines show you where the price has difficulty going above it.
Within asset selection, Michelle and her spouse may have to think like a rational investor. And rational investors are normally risk averse, meaning they don't want to invest in a financial asset that may run them the possibility of a potential loss. And she can become a rational investor by diversifying her stocks. Diversification basically means that when investing your money, you should invest in different types of stocks or security. You should invest in different industry, and you should also invest in different stocks that are located in different parts of the world. And this will minimize your risk, your overall portfolio risk. In layman's terms, this means don't put all your eggs in one basket. You want to choose stocks from different areas, different aspects, and different regional location. She should choose her assets or financial securities in such a way that as one stock goes up, the other one goes down, which create a balance in which will create a balance that will allow her to achieve her financial goals.
There are two types of portfolios that Michelle could possibly consider, whether it be a single asset portfolio, which only consists of one security, or a multi asset portfolio, which consists of more than one security. You may be wondering, what exactly is a portfolio? And simply put, it is a collection of financial instruments. Why exactly would Michelle want to build a portfolio? Well, building a portfolio helps to protect her assets. It would diversify her income and also help her to accumulate wealth.
Now that my classmate and I have covered the first two steps within the investment process with Michelle, we will now be explaining security analysis. Within security analysis, Michelle and her spouse would have to look at the expected return and the standard deviation. The expected return, simply put, is the return that Michelle and her spouse is expected to receive in her future investment. This is what she wants to achieve from her investment. When comparing expected return with the ROI, the return on investment, the return on investment basically shows what she will actually get from her stock, whereas the expected return shows what she wants to receive. She would also have to look at the standard deviation, which is the standard way of measuring the risk of a stock.
Standard deviation. Now, this is usually learned in statistics, and the definition says that it shows the volatility or how closely or how largely the values or data sets deviate from the average. In this case, it shows how far our returns deviate from our expected return. Now, using the graph displayed, imagine that Michelle and her spouse have an expected return of 15%. We have two stocks. Looking at stock A, we see that their returns range from 14% to 16%. This means that this stock has a low standard deviation because its returns are close to the expected return. However, for stock B, its returns range from 11% to 19%. This means that it has a high standard deviation since its returns are largely spread in relation to the expected return. Now that I have explained this, I asked my classmates, Janina and Matthew, which stock would you choose?
Personally, stock A.
I would disagree and say stock B.
Now, as you can see, their choices vary. There's no right or wrong answer when choosing which stock to invest in. It all depends on you, the investor's risk tolerance. If Michelle and her spouse are willing to get 16% or 14%, they will choose stock A. However, if they're willing to get a return of 19%, which is higher than their expected return, it may seem good, but they also have to be willing to get a return of 11%. So it all depends on your risk tolerance in terms of which stock you would choose. Here we have an example of Apple stock. We have its returns over a period of 5 years from 2017 to 2021, and we can see that its standard deviation is 9.12%, meaning that it has a low standard deviation, seeing as the various returns do not largely deviate from the expected return or the mean or average.
So the next step within the security analysis that Michelle and her partner may need to consider is the correlation coefficient of stocks. So as you can see on the left side of the screen, in case 1, when stock A is decreasing, so is stock B. And when stock A is increasing, so is stock B. So these stocks are moving in the same direction at the same time. You can describe this type of correlation as a perfect positive correlation. In case 2, you can see as stock A increases, stock B decreases. You can see that these two stocks moves in opposite direction. And this is a perfect negative correlation. And case 3, as stock A decreases, stock B increases. and you want your portfolio to have a partially negative correlation, because a perfect negative correlation is not not achievable. The next step that Michelle and her partner would have to take into consideration is coefficient of variation. And this basically measures the amount of risk per unit of return. It makes all the stocks comparable because it brings it down to the same level.
Some other security analysis that Michelle should consider are beta and CAPM. Beta is used to measure the systematic risk of a stock, and systematic risks are factors that affect a company that they cannot control, such as social and political factors. One example of systematic risk is what is currently happening in Russia with the war. Although the companies in Russia and Ukraine has no control over what is taking place, they are still affected. So this would be considered systematic risk. Beta also shows the relationship between a stock and the market, meaning how the stock moves in relation to the market. For example, if a stock has a beta of 0.78, if the market goes up by 1%, the stock will be up by 0.78%, and vice versa. If the stock goes down, and vice versa, the stock goes down. So the closer the beta is to 1, the more the stock moves like the market. CAPM shows the relationship between the expected return on an investment and market risk. CAPM takes into consideration the risk-free rate, beta, and the expected return of the market.
Here we have an example of Apple stock and its relation to the market. We can see that Apple stock has a beta of 0.99, and the market index in which it follows, the S&P 500, has a beta of 1.0. So the orange line, which is the index S&P, for every percent that the S&P goes up or down, the black lines, which show Apple stock, they will move up or down by 0.99.
So now that we have covered the theoretical aspect of the investment process with Michelle and her partner, we will now give some examples of some websites which Michelle and her partner can use to practice investment or execute real trade. So some examples of websites where Michelle and her partner can execute real trade are Interactive Broker, IBKR Lite, Vanguard, Fidelity, and eStar Trade. Michelle and her partner can utilize these practical trading websites such as Investopedia, Stock Stimulator, StockTrack Global Portfolio Stimulation, and Wall Street Survivor. Now that we have went through the steps within the investment process, we will be covering the types of trade and trade orders within the stock market via our live demonstration. But before we do so, Ryan will explain crypto and NFTs.
Now, cryptocurrencies and NFTs, they are a hot topic within the investing area. We know that you would like to have a more in-depth explanation of cryptocurrencies and NFTs, but for now we can only share a brief definition on them. Cryptocurrencies are digital assets in which individuals use as investments for online purchases, and NFTs, which stand for non-fungible token, they are digital assets that represent real-world objects like art, music, in-game items, and videos.
So we will be showing you a live execution of how we trade stocks on the stock market.
Here we have a stock track. This is one of the many websites in which we can use to try and just get your hands and feet wet in the investing industry. So as I show you the demonstrations of how we trade, my classmates and I will give you definitions on each action and type of order. So Janina will start off by explaining what is buying and what are market orders.
So within our presentation, Michelle wanted to earn a return of 11.61% in order to meet her financial goal of purchasing a house. So we will be, so she should purchase or buy the Apple stock, 100, sorry. So one of the stocks that generate that return was the Apple stock. And Michelle wants to purchase 100 shares of 100 stocks of the Apple stocks with a market order. And a market order is basically buying or selling a stock at the current market price. And on the right side of the screen, you could see that Apple stocks is displaying a bearish market where the price of the stock is decreasing.
Michelle could also choose to short, and that is borrowing shares in the market in hopes of buying those same shares back for a cheaper price. She could also cover, and cover is when short sellers buy back those borrowed shares to close out their positions.
Another action which Michelle and her spouse can take are would be to buy, would be to sell, sorry. They can sell these stocks at various order types known as a limit order, which allows you to buy or sell your stock at a specified price, or a stop order, which allows you to execute a trade when the stock has met that specific price. There are various order terms such as good till day, good till cancel, and good till date. Now that we have showed you the various components on StockTrack, we would like to thank you for listening in and having us inform you and educate you on how to grow your money through investing. And as an assignment for the BUS 250 investments and security class, we had to each create our goals. We had to go through the same steps as Michelle and her spouse, which were to create our goals, find our required interest rates, choose various types of financial assets, use the forms of analysis that we mentioned, such as fundamental and technical, and we had to build and diversify our portfolios, analyze our securities, and finally execute our trades. I will allow my classmates to give a word or two, a brief sentence describing their investment experience.
My investment experience was the task was a bit complex in the beginning, but once we had a general idea and understanding of the different steps within the investment process, it was a bit easier to handle and manage our portfolio.
I would agree with Miss Lloyd. It was a bit challenging at first, as I began to get frustrated. Sometimes, just like the charts, sometimes you go up, sometimes you go down. You never really know what to expect. But I think it was worth learning. And hopefully, with this presentation, you would have gained the relevant knowledge to do so yourself.
I also agree with my classmates. It can be quite tedious or frustrating because stocks can go up one day, stocks can go down one day. But in the end, it is rewarding when you see your portfolio diversify, see your returns start to grow. But with investing, it's all a matter of patience and seeing where it goes. I would really, my classmates and I, if you are really interested in investing, and we hope that this presentation has piqued your interest in the area, we encourage you to not only use our presentation, but to also continue to do your own research and to also look into professional advice in investing or even signing up for a course at the college. There are many ways in which you can expand your investing knowledge.
Okay, good afternoon or good evening again. And I want to say, I give a broad thank you to the students. I am extremely happy of what we have just witnessed. And I'm going to now turn it over to the guests that we have within the space. This evening, we have three special gentlemen who were observing intently as the students presented. We have Clarence Faulkner, who is representing PMI this evening, as well as Jeremiah Frett, who is the financial secretary, as well as Neil Smith, Dr. Neil Smith, who previously served as the financial secretary, and he now has a new appointment with the RDA. So I'm going to turn it over to you, gentlemen, to give your feedback of what you just witnessed. Meanwhile, we'll also be checking the chat on Facebook to see if there are any questions that anyone wants to ask from the general public. But indeed, I have learned a lot, and I'm going to open the floor for discussion. Mr. Frett, do you want to go first?
Good afternoon, everyone. Thank you, Ms. Lewis and Mr. Foy, for welcoming me to participate in this presentation. I found it very, very informative, and I congratulate the students. Well done. And the reason why I can say that, when I traveled back in 2008, I went to Glasgow, Scotland, to do for my master's, and this is the exact subject I studied in Glasgow. And some of the experiences that you shared in the material that you shared, it brought back those memories. And so I was able to follow the presentation, and I found that you did a very good job. I found the team and the methodology on how you went by, how you participated actively. Each person had a role to play, and how it was succinct in how you delivered. I found that to be very good. We could hear you clearly because of how it was difficult to see your facial expressions or body movements, but this kind of presentation probably didn't lend to that. But nevertheless, for me, and I'm sure the rest of the audience was able to follow. Just a couple things I would like some clarity on, if the team can assist. On the security analysis, number 3, I think Genia Lloyd was presenting that. Wasn't quite clear on what he was trying to articulate in that particular scenario. I'm not sure I got that, so I don't know if you can explain that. Security analysis number 3. Gina, Ms. Lloyd?
Are you talking about the correlation of coefficient?
It's where I had a different security analysis, yes, and there was a third one. And just trying to explain how the movements were increasing or decreasing. I don't think I quite get what you was trying to explain.
Well, case 3 of the presentation with partially negative correlation, it is similar to a perfect negative correlation. As one stock increases, another stock decreases, but it is not at the same exact time. So it wouldn't give a balance like how a perfect negative correlation would give, just a part balance.
Okay. I think how you explained it there much clearer for me than when you was doing it through the presentation. There was also for the team as well. Did you take into consideration during the valuation you used the house as an example, and you talk about the value? Did you take into consideration that house is a period of time? The value of that house in year 1 might be different in year 10, because of course, in most countries the value of houses appreciates, but in the United States and some other countries it might be quite the opposite. There might be a housing crisis and the values of house plummets. Did you take that into consideration for the team? Anyone?
No, we actually did not take that fully into consideration, but we would take it into consideration at another time when conducting investing.
All right. And another area had to do, I see the team unanimously chose the Telsa stock. Telsa, I think it's the name, that's the vehicle company with them. And you basically base it that in the country it is basically stable, and you just said that because of the crisis in Ukraine and Russia, that you would not want to invest there. But I do know that there's other aspects. If it wasn't Telsus, it was a stock that was physically a commodity like oil. Would you have considered that if that was a stock that you were looking at, a company that was traded in Russia in commodities such as oil? And not consider whether or not it was a safe place, the government was stable and so forth, and there was no crisis. Would you have considered that? That's just for the team. Maury, I did not hear from you as yet, Mr. Maury. Would you have considered that?
Yes, I would actually.
Okay. And I do have one more question with respect to the stocks. I do know when I was studying the subject matter, one of the things that we had to do is to, on a regular basis, find out what is happening with the company or the stock, the companies behind that particular stock, whether it be quarterly reports, any potential investment or research and development. Did you take that into consideration in your analysis?
Yes, we took those into consideration in our analysis, with not only with this presentation, but also with our project. We have to look at the different aspects of the company.
Okay. Thank you so much, Jania. I just want to say to the staff of HLSCC Community College, I think this is my second time participating with this team. I think it's a very good thing that what you are trying to achieve, because some persons may say in the Virgin Islands, you may not get to exercise some of the things that you learn, but you'll probably be surprised and be in a global space. And we have to look at other forms of investment. And in some areas, even here in government, we do have investment, whether it be in some of our SOEs or government. We are quite more into safer types of investments, but nevertheless, there are some areas where we do have stocks and we have to monitor. We will have to say to the person who is dealing with that, what is the current status of these stocks? We can't just rely on persons. And we too may have a personal interest as an individual, want to invest, like you put forward this scenario of building a home. And while persons are young, especially to the younger persons, I wish someone held me by my hands and showed me how I could have invested at an early age and be able to generate the kind of income that I would like to, through investment, to do a number of things. So I congratulate what you are doing and HLSCC Community College in the work of the students. Good job, team.
Thank you, Mr. Frett. You really asked them some tough questions. And I do think that they can now go back and maybe reshape or reconsider some of what they have proposed. This is all part of learning. And what we are actually engaging in here is like an experimental laboratory of some sort, where we are allowing the students now to not just demonstrate, but to also have to handle the difficult questions and have to think on the spot. And that is also what we are trying to get them to be more comfortable and more confident. So I'm going to turn it over to Mr. Faulkner. Are you ready to ask any questions or make any comments on the presentation for this evening? Thank you again for being with us. Over to you, Mr. Faulkner.
Good afternoon, students, faculty, and other members of the team. Thanks for the opportunity to not only listen to the students and hear the effort that they've put into presenting this afternoon. As the financial secretary mentioned, I think the method through which they have reviewed and presented the material that they've covered thus far speaks well to their future in terms of their ability and their interest in the field of finance and particularly investing. I have made a couple of points as it relates to the content of the material that was shared. I thought the presentation was well presented. There are some areas that I thought could have highlighted a bit more detail. For example, in the first part of the presentation, when they highlighted the options to consider as it relates to the individual, Michelle, building the house, I thought it would have been, I thought they should have considered what are some of the options in terms of seeking funding to participate in the individuals participating in seeking funding for the purchase or building of the house. So I thought they could have also mentioned the whole matter of debt financing versus investing, because then the discussion will then center on whether or not it is more cost effective to debt finance versus taking the risk of trying to get the kinds of returns that they had indicated in terms of the two future value presentations. I also echo the sentiments raised earlier in terms of whether consideration was given as it relates to the future value or the incremental value of the asset, which would be the house, increasing over time as opposed to it being stagnant over the next 5 years versus the next 10 years. So I thought that's another point to give consideration to. When we jumped over to the topic of the various asset classes, and I think the good gentleman, Mr. Murray, talked a little bit about mutual funds. I think it would have been important also for them to also talk about how mutual funds are valued, because it's one thing to simply say it's a basket of securities, but then how does the individual then know what is the value of the mutual fund based on the various contributions from the various stocks within the mutual fund? So I thought that is something that could have been discussed as well. Fast forward into the discussion between whether the security of Tesla versus what's going on in Russia and Ukraine. I think one of the ways, and they touched on the whole matter of analysis. One of the areas that we do a lot of work on is something called quantitative versus qualitative analysis. What I mean by that is on the quant side, we spend a lot of time dissecting the numbers and the financials and so on and so forth. And I think you did briefly mention it. On the qualitative side, then you really start to drill into the management and what will drive the company and so forth. That gives the quality aspect of the company in terms of whether or not, once matched with the quantitative side, you're able to make a better informed decision. The matter of Tesla, I can understand if you're simply just looking at it in isolation, but also take into consideration that Tesla does not only operate in the United States. The geographical risk and political risk in other geographical areas may also have an impact depending on where Tesla is generating the majority of their cash flow from. When we jump forward to slide 20, when we talked about the various charts and so forth, one of the things that I realized that was discusses the charts going up versus the charts going down. I think it's important to understand the dynamics within the flow of the charts. Something called, let's say, for instance, breakout sessions, which they briefly touched on, but the whole matter of head and shoulders, top down and so forth, that was something that they should think about as well. We talked a little bit about diversification when it talks about single assets versus multi-asset portfolios. One of the things that I think we can also give consideration is the meaning of alpha in terms of the incremental return above and beyond the expected return. And I think what that gives them is if they're taking on additional risk, what is the incremental gain they will benefit from taking on that additional risk? We also talk a little bit about short sellers. And I think if you're talking about short sellers and so forth, then the conversation should also talk about whether or not you're going to be using margin accounts to do so. And if you're talking about using margin accounts, does that increase your risk just in case the short does not happen the way you would want it to happen? And is that going to cost the person doing the investments more harm than good when in fact they have an expected outcome to execute, let's say for instance, purchasing the house? On slide 30, when you talked about the Apple stock, I realized on the chart you had triple Q. Triple Q is actually the NASDAQ and not the Apple stock. So I would double check that chart to make sure that you're actually using the right chart, because Apple is AAPL, triple Q is the NASDAQ market. So the reference to the chart, you have to make sure that you're using the right chart to get the right results as it relates to what you're using. There was a brief slide on the matter of crypto and NFTs. And I know, as the presenter mentioned, that if we wanted more information, we can get into. I think one of the things that I would encourage members to really look at is start, when you're looking at investing in general, is start by looking at traditional asset classes before getting into what we now see as alternative asset classes, such as crypto and NFTs. I know right now it's the big buzzword in the community. However, I think it adds an added level of risk when your first step into the investment community is an asset that you don't thoroughly understand and you can't perform the necessary analysis as you would on a traditional stock or asset class to be able to justify that level of return. So again, I mean, just some points that you should give consideration to. But I think overall, it's a great place to start. Thanks for the opportunity to listen in and chime in, and I'll be happy to clarify any of the points that I raised earlier. Thank you.
Thank you so much, Mr. Faulkner. And I do agree with a lot of the comments being made. And I noticed that our students are taking notes. So this is a learning opportunity for them as well. And just so that the viewing audience can have a greater appreciation of what is taking place. This activity, this would have been part of their project. And Mr. Faulkner and Mr. Frett and Dr. Smith are actually also our external assessors for these students. So what you're actually witnessing is a live demonstration of what we actually do here when we are assessing our students. You are getting to hear live ball by ball coverage of how we actually go about determining, whether the students are operating at an efficient level or, where they are on that chart. And we're not just engaging in this, as I said, to give them a grade. This is that. I mean, yes, obviously they're going to get a grade from this, but it is also to allow them to learn from the experience and to also allow our community, in a sense, to get to see what actually happens when we are assessing our students. All right. I am going to turn it over to Dr. Smith. We have heard a lot of feedback so far. I do hope that Dr. Smith, they've not stolen your points and that you can also contribute to the conversation. So go right ahead. Dr. Smith, we're not hearing you. Your mic. You're not sure. Can you? Is your mic on? Not hearing you.
Hello.
Do you want to speak in the mic again?
I'm speaking in it right now. Can you hear me?
We're not hearing you.
You're not hearing me at all?
I can hear him now.
Okay.
Okay. Go ahead, Dr. Smith. We can.
All right.
Go ahead.
Okay. So thank you for the opportunity. I'd like to say that I think that the points made by the presenters before me were good. I share those views. And actually, speaking after Clarence is kind of funny because he's an expert in a country, right? So, but I have a few points, and it's just for you to, as you do a class like this, it's important for you to understand a lot of the fundamentals behind what you're doing. So, like a question you had at the beginning, I think it was a fourth slide, where you are speaking about things like the shorter timeline and a higher investment return that will be required between 5 years and between 10 years. I just want to know if you understand why that is the case, why you need a higher rate of return over a shorter period. What's the fundamental concept, finance concept that requires you to have this highest rate of return? Because between $250,000 and $750,000 is the same difference. So could any of you tell me why you need a higher rate of return over a shorter period of time? What's the fundamental finance concept that requires that? Anyone?
I can give attempt at giving an answer. I would believe it has to do with the concept that the more risk you put in, the higher the return should be. So that would cause the interest rate to be a bit higher.
Okay. Actually, it's really the issue about compounding, right? Because 250 to get $250,000 to $750,000 over a shorter period of time, you got to understand that you're compounding the interest over a shorter period of time as opposed to a longer period of time. So if you do it over a shorter each year, and why I'm saying that is because it's important to understand as you go through the investments, when you're looking at your portfolio, how it would go over time and stuff like that. But I just like to say again that I think is a the presentation is well done. Obviously, there could be some polishing up, but I think it's very, very well done. Is in my view, are the basic concepts you understand. Issues like the correlation coefficients, your beta values for your stocks and how they relate to each other as you put together your asset classes and try to determine how your portfolio would go. So I'm really, really pleased with the quality of the presentation itself. But like the previous speakers before me said, I think, is that you could actually do this to an even wider audience, but you just need to polish it up. But I think that for what is worth is well done. At least for your level, I think it's pretty well done. But I have another question to ask, which is, what about, you speak about the time value of money, but do you believe that your dollar can actually increase in value over time based on the time value of money? And what would you require in order for that to happen? Miss Lloyd, perhaps?
Yes, I do believe the dollar can increase over time.
What would be the reason? How would that happen? How would the time value of money, the concept of time value of money, allow you to have the dollar not decreasing in value over time, but increasing in value over time? What would you require in order for that to happen? Okay, so and this so these are the fundamental concepts I'm just trying to get to you on, right? So with the time value of money, the reason why your dollar decreases over time is because of inflation, right? So if I can buy a basket of goods for $1 today, if there's inflation, then that dollar would be worth less in the future, right? But that's positive inflation. So if there's negative inflation, meaning that you have a point where I have a dollar today, can buy a dollar today, right, would be worth $150 tomorrow. That means inflation has to go in the opposite direction. That doesn't happen in real life. I've never seen it happen, but theoretically it can. So the reason why I'm asking you that question, the reason why I pose that question to you is that as you understand these concepts, the fundamental finance principles are very, very important for you as you get into the more difficult situations and some of these things are posed to you, even though it might not happen in real life. It demonstrates that you understand the theory behind the finance concepts that you're applying. So even though in a practical sense, historically, the time value of money causes the dollar to decrease, your purchasing power to decrease over time. It is possible for your purchasing power to increase over time, although it doesn't happen, generally speaking. Okay, so that's just another fundamental finance concept that I just wanted you to be aware of. I think that as well, Clarence touched on a important point in respect to you making the reference to Tesla stock over Russia stock. But when you say Russia stock, what do you mean? Do you mean government bonds or something? Or what do you mean when you say Russia, stock in Russia, as opposed to Tesla? And then Tesla is also a multinational company that is exposed to things all over the world, in China, United States, in Europe. So that was an important point. So to say that which stock you prefer, Russia stock or Tesla stock, that is a bit, in my view, still a bit theoretical, right? So the point that Clarence brought up is you need to be a little more specific about that, because then when you say Russia stock, exactly what do you mean by that, right? So you might say it's a state-owned company in Russia that has been capitalized on the stock market, right? That probably would have been a more precise term to use than to just say Russia as opposed to Tesla, right? So that's just one other point that I'd like to make. The point about real estate increasing over time or decreasing over time, that is something that you would have had to look at as well, because in some areas in the world, in the BVI, for example, real estate tends to increase. The value of real estate tends to increase over time, but it's also possible, depending on where you are, for the value of a real estate to go down. Right, so that was just jumping back to the beginning that Mr. Frett and Mr. Faulkner was speaking about. Also, I just want us to, and I'm fine that I'm touching on some of the points that Clarence touched on, but in a different way. What do you feel is more important to you? Is it the macro analysis or the micro analysis? In other words, do you believe that the qualitative analysis is more important, or the quantitative analysis is more important? Mr. Murray, perhaps, what do you think?
Thank you for the question. I would like to say the micro would be more important because that's
Which one?
come again.
Which one you say? I didn't hear what you said.
The micro.
The micro. Okay, tell me why.
Because with micro you can predict, or you can look at micro stuff, but macro you have no control over macro.
You
So
do?
because of political reasons, companies can control what happens in politics. So I mean, for that reason, I would say micro.
Okay, so you'll have to think about that very carefully. For example, if you are in a country like a country with a volatile political climate, then in my view, the macro analysis would be more important than the micro. Well, it might be. It depends, right? So, for example, if you're in a country where the government changes every 6 months, there is war in upheaval, the policies of government fragmented, and all kind of weird stuff, people exposed to bribery and all of these type of things, and governments interfere in the affairs of businesses, then it might be in a case like that more important or more prudent to pay more attention to the qualitative side of the analysis, because the company itself fundamentally might be okay, but it might be affected by the political environment, to the point where that might be the factor that actually makes the decision. So the point I'm trying to bring out is that it depends. And I guess Clarence would be better at saying this than me, because he does this every day. But in my view, it would depend on the location of the company, and the kind of environment in which it finds itself working in. For example, if it's a multinational company, it might not be as important, or it might not be as volatile if it's in just one country that is exposed to political, even environmental issues. Okay, so I just thought I'll mention that a little. You spoke about the beta coefficients and the correlation coefficients. I thought that was important. That's fundamental, I think, to understanding how to put together a portfolio well. But tell me, any one of you, when you're looking at capacity for returns, I guess, how do you balance, if you were to advise someone, let's say a young investor who's maybe 20 years old, he's up and coming, just got his degree in accounting, he's working for a Fortune 500 company, as opposed to someone who is maybe 60 years old, and will probably retire in the next 5 years. How would you advise those two different individual classes, I guess you say, on the type of risk that they should expose themselves to? Anyone of you could answer that.
I'll try again. If for someone that's retiring, I wouldn't advise them to take on too much risk, because most likely they'll be out of a job. So the money that they have that they're going to invest there, possibly heavily depending on it, as opposed to a younger person. Well, again, I think it depends on
Don't
their.
second guess yourself. Just tell me what you think based on based on what you've studied thus far.
Yeah, I still would say it depends, but for someone that is younger,
Mhm.
their financial standing may be a bit stronger than the person retiring. They may not be heavily depending on that same money as much. So I
Okay,
believe.
so the reason why I asked you that question is if you're advising someone,
before you
that's
continue
if
input.
you're advising someone, that is one of the things that you probably need to be thinking about at the beginning. Janine, I think you're going to answer the question.
Yes. Both individual have to think about their goal, what goal they want to achieve. I know the older person may want to save towards retirement, so they have to take time into consideration and since their retirement will be coming all year, they might have to increase their risk a bit more if they want to achieve um, like higher returns. So, but whereas the younger person, if the younger person want to save towards retirement, they might have to choose like lower riskier stock because they have a lot of time until retirement.
Okay, so again, that's one of the things I need to think about very carefully when you're advising individuals on
Um,
the investments.
may I give an
Uh,
input?
Say again, go ahead, Mr. Murray.
I was asking if I
Sure.
could give an input.
Sure.
Okay, I would agree with what they both are saying, but in addition to that, I think it all depends on their risk appetite and how much risk they are willing to take on. Because you can't just say because of the age limit, because maybe they want to take on the risk. You never know. So I think it's up to them. Everybody case is different.
All right, but if it was left up to you, knowing that someone is about to retire as opposed to someone is younger, because you're advising now, what would you tell them?
I mean, then again, it's specific to each person,
All right.
because if older person, while I would advise them to take on less, it all depends on their financial position at that point in time. If they
Okay.
want more money, like quick money, take on more risk. If you want to be more risk averse, take on less risk and protect what you have so far.
All right. Okay. So I guess in closing, I just like to say I'm pleased with what I've seen. I mean, obviously there's room for improvement. There's always room for improvement. But I think that is a stalwart attempt, a robust attempt. It's obvious to me. Yes, go ahead, Clarence. Sorry. I defer to Mr. Clark
No,
Faulkner.
no. Neil, you raised the point earlier with Mr. Murray talking about the matter of micro versus macro, and I just wanted to kind of bring it a little bit closer to home.
Yes.
You guys will recall when we went through the pandemic, and the one area in the economy that was severely impacted was the tourism sector. So, using the theory that Mr. Murray was just referring to in terms of he would recommend the micro. So, the micro basically means you have, let's say, a beautiful restaurant at the Pier Park. You have the bells and whistles, the right staff, the right people in place, the right tables, all the right pieces to run that facility and run your company in the best way you can. But because of the pandemic, the macro elements, no ships and no tourists is coming to that park to be able to walk into your restaurant. There's absolutely nothing wrong with the restaurant. But if the guests do not come in to participate and offer you revenue because of an external factor that you had absolutely no control over, then your business will eventually suffer. So I think there is a delicate balance depending on the nature of the business and the environment by which that business is conducted its affairs in. There must be a balance between both micro and macro to be able to make a wise investment decision. So I just wanted to clarify that point and bring it a little closer to home.
Yes. Thank you, Mr. Faulkner. That's precisely the point I was trying to make. You see the difference between an expert and a subject and someone else. So I just like to say that I'm quite pleased with what you've done. I think my advice to you is when you're doing things like this, to understand the fundamentals well. In my experience, the difference between good professionals and bad professionals, I mean, in terms of the advice that it could give, is the understanding of the fundamentals, right? So that if you're presented with a problem that is not that doesn't happen every day, then you can defer to your technical knowledge, to your deep understanding of the subject matter itself, and be able to give advice or respond in a manner that might be unconventional but is based in deep technical understanding. Okay, so that is my advice to you as you go ahead. It is what I've noticed is the difference between high watt professionals and low watt professionals. Whenever you throw a curveball at somebody who is very good at the subject, what sets them apart is that the fact that they understand the fundamentals of what they're doing. Okay, so Janina, I know I work with you every day, but these fundamental things are something you need to pay a lot of attention to, so that when you go up and you actually start to give this advice, you could be, everything that you say is grounded in deep technical information. The other point I'd like to make, and I hope that the individual involved doesn't you won't feel affronted, but I'm going to say it anyway. On the line, we have a very highly qualified and experienced investment manager, and I'm sure that he would be willing to have conversations with you, or even show you how these things work in practice, and you'll be able to get a better appreciation of what you've studied by actually seeing it happen in real time. Okay, he's there. He's not going to say much, but it's Mr. Faulkner. And you also have Mr. Frett, who deals with these things from a government standpoint on a daily basis. So you have two very well placed and qualified resources that you can use if you want to understand more. Okay, but I'd like to say a job well done, and I'm pleased. I'll continue to strive to do better than you've done today, and you will always do well in your endeavors. Thank you.
Okay, thank you, Dr. Smith. And I want to, again, support the comments and feedback that have been provided thus far. And what I would also like to maybe put out there now is the intention to have more practitioners and persons in the field, industry related personnel, to actually be invited to our classes, so that the students, yes, they're going to be interacting with the information and learning the fundamentals and the foundations of the subject matter, but they can also be able to interact with you and to get that added, I would say, that added element of professionalism, as well as having that additional expertise. That's the word I'm looking for. So that they can drive home now, or to be in the process of being able to get a better sense of what this is really about. So I think we are on a good path forward, and I see this as opportunities for our programs going forward, our courses going forward, and I can definitely say, Dr. Smith, Mr. Frett, and Mr. Faulkner, you will be hearing from us here at HLSCC as we continue to ensure that our students get the right exposure that they need to have. There was one comment on the live Facebook feedback. There was a particular question about what are the prerequisites to be able to get to this point. And one of the things we obviously would have to do, they would have to go through the fundamental classes, as I said, from business. So you would have your fundamentals of business and so on. They would have to do economics, micro, macro, but as well, principles of finance, financial markets and institutions, and investments. And as I would also indicate here, we are also looking at the program itself and seeing whether or not there are other areas that need to be brought in, so that it can basically make the program and the experience but for the students, a little bit more comprehensive and well shaped, so that they can be better prepared for the world of work, and also to go on and do other forms of studies at the higher level. So I am assuming that all of the assessors have put in all of their comments. Anyone has anything else to add at this point?
I do not have anything else to add.
Go ahead.
I do not have anything else to add at this time, but just grateful for the opportunity to participate in this forum. And I was going through checking the online, and much people don't realize sometimes the stock market and other things that happens, how it will impact our lives. So I'm truly happy that this forum was put on, because the Federal Reserve, I think the gentleman's name is Jerome Powell or something like that, when he announced the benchmark rates, interest rates hikes, you saw what happened yesterday and today. It was the biggest drop in the stock market for this year. And when we look at where businesses, agencies such as Social Security or government who may have invested some of the cash flow that they have into these different stock markets, we know how it's going to impact those things. So it's important for us to follow and get an understanding of the stock market and other type of financial instruments, and how it impacts us in our daily lives. We may not, like I said, we may not be using it that directly, but our investments that we have made, other government agency might be impacting your daily way of life. So thank you, Ms. Ambrose, once again. I do have to leave, but to thank you for inviting me.
Go right ahead, Mr. Faulkner. I think you wanted to speak as well.
Ms. Ambrose, I am very passionate about the youngsters, anyone that is interested in finance. And I can tell from the three persons that are there, they have a keen interest. So before you reach out to me, I would kindly ask that you escort, or if you're available, to bring the three individuals and visit my offices. We have the first of its kind international trading floor, where actual trading and analysis is being done by live equity traders and analytics. And I think if these individuals, the students, are now at a stage where they're doing this type of work and going through these kind of classes, what I'd like to at least do is expose them to what happens in the real world on a day-to-day basis. So with your permission and with the acceptance of the students, I will invite you to bring them by the office at a date to be agreed on, and have them see firsthand everything that we've talked about, not only in theory, but live action, real money, real markets, real analysis from all levels, and then have them hopefully walk away from there realizing we don't have to move to New York City to do this. You can do this right here by the roundabout in Rotown.
Mr. Faulkner, you have me blushing. That doesn't happen very often, but thank you so much. I am so elated and happy, and I see my students blushing as well. So they are pleased. So thank you so much for extending that invitation. And we will be in conversation, definitely. Thank you so much again. Our Dean of Arts is on the call, and I'm going to invite her to just give closing remarks. We are hoping that there's some additional videos that we want to show, but we are managing the time, so we'll see how that goes. But outside of that, I want to thank you all for tuning in and being a part of this I would say, historical activity here at HLSCC. It's been part of the HLSCC showcase that's been on for the entire day. We had the face-to-face or the physical showcase early in the day, and we've ended it off this evening with the virtual showcase, which is our finance students tonight. So I'm going to just leave the dean to give her closing remarks. Thank you again, and God bless everyone.
Thank you, Mrs. Ambrose. Good night, everyone. As Mrs. Ambrose mentioned, this presentation is actually a part of our Stingray showcase that we've had all day. And we're displaying the levels and the types of work that our students do here at HLSCC across all the disciplines that we have. Our guests are assessing our students, and we take their feedback very seriously because we want to look at inter-rater reliability with the work that we're having here at the college, as well as validity from our community members. Many of our college classes actually have guests come in to assess final projects, not just in the academic area, but as well as the workforce area. And they're able to share very necessary skills and knowledge with our students to enhance that experience. So special thank you to our BUS 250 students, the investments and securities market students who prepared this presentation tonight. They've explained basic investing, I think, very clearly and have provided an example for us to be able to follow. Thank you to the guests who have provided very meaningful feedback to our students, and they've asked some very thought-provoking questions. It is clear that our students are being exposed to some relevant and current trends in the business community. So thank you to Mr. Foy, the instructor, as well as Mrs. Dana Lewis Ambrose, the head of that department, who made this very timely discussion possible. Special gratitude to our IT support team for allowing this discussion to happen live online, because we must realize that the virtual sessions would allow us to reach a much wider audience, and we're able to share the great work that our students are doing here at the college. I am pleased to see that our students are actually able to communicate at this level with members of our business community. I'm sure that the points that have been shared by our guests with our students would definitely allow for a better presentation going forward, as well as a greater understanding of investing. It shows that our students are gaining knowledge and skills that would enable them to be on a road to success once they leave our doors. I have learned quite a bit, and I will remember to diversify my investments and consider variables and risks that will affect my investments. I hope that our viewing audience was able to gain some useful investing knowledge. Thank you all for tuning in, and have a pleasant evening.
news attention away from COVID. Yes, Russia invaded Ukraine and unearthed a worldwide concern threat of World War III. But before the state of things get to that, let's discuss how Russia's actions have affected and will affect the world's economy. Okay. First, I'd like to give some background information on the conflict. It actually started in 2014 after the Ukrainian Revolution of Dignity. The initial reason for the conflict was focused around the status of Crimea and sections of Donbass, and which one of the countries owned it. But even though internationally both areas, both regions were recognized as being a part of Ukraine. Now we jump forward to now, 2022. Russia actually invaded the country of Ukraine, killing many people and pulling all attention away from COVID. And according to a global conflict tracker, the current number of civilians casualties killed since the invasions has reached 2,685, and excesses of 4.1 million refugees have fled the country of Ukraine. Okay, so yes, you guys understand where it started, and now we have to current. We already know that the world economy was already under threat and was already recovering from the effects of COVID-19. We've been in a recession from 2020, and we're now in 2022. And things were just starting to bounce back. Things were just starting to get better. And then, boom, Russia invaded Ukraine and turned everything upside down. First, let's start with the topic of scarcity and choice. The Russian invasion of Ukraine definitely affected the scarcity of crude oil, as crude oil is a non-renewable resource, and Russia being the second largest crude oil exporter in the world. After they invaded Ukraine, a lot of the world, a lot of the countries put sanctions against Russia as punishment. And thus, the world has lost one of its leading crude oil exporters. And as a result, it very much limited the rest of the world's choice in crude oil exporters. Another way how Russia has affected scarcity and choice is through wheat, the scarcity of wheat. Together, Russia and Ukraine collectively provide 30% of the world's exportation in wheat. And since there are sanctions against Russia and since Ukraine is being invaded, they have essentially taken away 30% of the world's wheat supplies, which also limits the amount of suppliers countries can choose from when buying their wheat. The reduction in wheat suppliers can result in a wheat shortage across the world, which could cause a shortage in foods such as any wheat cereals or any cereals on a whole, and cooking oil, because one of the main ingredients in cooking oils that we use around the world is, and this is a double hitter, because Ukraine is one of the largest exporters of sunflower oil and corn oil. A substitute for the cereal, the wheat oil, is also being affected. Next is opportunity cost and comparative advantage. First, the opportunity cost for not doing business with Russia is having to find other suppliers and depending more on them, which will cause the prices to go up and you have to pay more. But for the comparative advantage is most of the world have already banded together and put sanctions in place against Russia. So if you want to go against that, you become the enemy. And right now, Russia is the enemy. And if you were to side with them, you yourself, your country, your business may be penalized for working with them. Next is supply and demand. As stated before, crude oil is one of Russia's biggest exports and one of the world's biggest exports. So once sanctions were placed against them, the supply for crude oil was drastically divided. And since crude oil is a non-renewable resource which most of the world still use to power most of our machines, the demand is always rising because the more we use it, the less of it is around. And since the sanctions have been in place, the supply has been drastically cut. So right now, the supply does not meet the demand, which will cause prices to increase. The next topic is gross domestic product. The COVID-19 pandemic already took a very significant toll on the global GDP, which resulted in the gross domestic product to decrease by approximately 3.9% from 2019 to 2020. The last time the economy had such a drastic downward shift was when the stock market crashed in 1929, and the period of time is known as the Great Depression. We are kind of still in COVID times, and the added potential of a power and food shortage will just add to decrease the global gross domestic product. With fewer fuel sources, oil will be more expensive, which will increase the cost of production, resulting in a reduced output of final products. Next is aggregate demand and supply. As stated before, the conflict with Ukraine and Russia has caused supplies such in materials such as crude oil and wheat to decrease, and have put us in a time of scarcity. And such as we are in a time of scarcity, the demand will increase. Next is inflation and interest rates. According to the International Monetary Fund, the US inflation rate is predicted to reach 7% in 2020, which is drastically higher compared to 4.7% in 2021. Inflation will cause suppliers to increase their interest rates, which will result in buyers having to pay more money. Individuals with mixed nominal incomes, such as the elderly retired individuals in society that get their monies through pensions, are severely affected as their spending power will be decreased because the income that they received will stay constant while the prices of things will go up, which will reduce their spending power. Next is recession and unemployment. Recession is directly linked to unemployment rates, and since we have basically been in a recession from 2020, which was primarily a result of the COVID-19 pandemic, and now moving forward into quote unquote the times of Russia and Ukraine, the recessionary period will increase, and our troughs or the lowest points will get lower, and as a result, unemployment rates across the world are most likely going to increase, especially in Ukraine, as have been invaded by Russia, and many of their citizens have fled to Europe and other countries. Next, I would like to talk about the BVI's position in all of this. Yes, we are located very far away from Russia and Ukraine. That whole conflict is happening on the other side of the world, but we too here can be affected. First, our major financial pillar in BVI is financial services, and if the rest of the world is going through a recession, we will also feel the effects. And also, because of the sanctions in place, any Russian-based businesses, we will have to halt business with them, and we won't have any choice. Next, we rely heavily on importing. So if the larger countries or the countries that we are reliant on for importing from are going through shortages due to their lack of fuel or their lack of wheat, we will also feel those effects. And since the inflation of oil is going up, the BVI could be facing a potential power shortage if we are not able to purchase fuels at the same rates as we were. Thank you for listening. Now I'll go over some of the key points. Russia invaded Ukraine, and as a result, most of the world put sanctions against Russia. Russia is one of the leading exporters on oil, and once the sanctions were placed on them, that decreased the oil supply for the rest of the world, causing inflation on the price of oil. And because the price of oil was inflated, the cost of production was also cut short, which reduced GDP. And all of this has acted to increase the time of the recession. And since in times of recession, unemployment is increased, the unemployment rates are likely to increase also. And the BVI is very far away, but we will still feel the effects of the shortages that will come from the Russia and Ukraine conflict, because one of our largest financial sources is financial services, which will be threatened by the global recession. I hope that I have adequately expressed just how severely the conflict between Russia and Ukraine will have an effect on the world's economy. Thank you for listening. Have a nice day.
Good evening, everyone, and thank you for joining us tonight. We have a special presentation in place for you tonight. The students of the Business 240 feet class, which is the Financial Markets and Institutions section of the HLSCC Community College, will be having general discussions in financial services. We thank you for joining us, and this evening we have the students of that class. To my immediate left, we have Ms. Ryan Smith. To her left, we have Mr. Matthew Murray. To my immediate right, we have Ms. Janina Lloyd. And to her right, we have Mr. Brent Andrews. So thank you for taking the time out, and we hope that you do enjoy this session which we have prepared. Good evening, class. How are you guys doing this evening?
Good evening. I'm fine.
I'm doing well, thank you. Janina, yourself?
I'm doing great.
Excellent, excellent. So we know that the news nowadays is quite topical, with a lot of hot topics going on about financial services and financial markets, institutions, wars, as the case might be. So tell me, what do you guys think about financial markets and institutions? Do you think that they are possibly good business ventures in this climate? What are your thoughts on that?
I believe that it is a good business venture and that it is very important within the various economies because they help with either the regulations or just maintaining an efficient economy.
Okay. Well, I guess a lot of people in the general populace may beg to differ, but I mean, honestly, in any business, you have your pros and your cons, and one of the key things that actually helps to determine whether things will flow the way that they should is regulations. So with that, do you think that perhaps a lack of regulation or perhaps a lack of enforcement in a particular area may have resulted in businesses not being utilized the way that they're supposed to be?
Yes, because a lack of regulation in certain areas, the business may take that to their disadvantage. The business may take that to their advantage and generate money in order to benefit themselves instead of providing a product or service that would benefit the consumer.
Okay, so basically we're looking at getting things on a level playing field, then, you would say, so that all persons who are within that particular industry or that line of service are fairly competing against each other.
Yeah.
Is that what you're saying? Okay, I understand. I think that perhaps that is essentially what may be missing from some of the financial services as well. The key thing about financial markets is that when you have different financial institutions that are existing in it, it's important that you have a set of ground rules, be they regulation, be they guidances or regulatory notes, to help the persons who are in those areas to understand what is expected of them. So Matthew, tell me, with that, do you think that the BVI so far has demonstrated through the years that they're doing a pretty good job of regulating the various types of financial institutions that they have here?
I would say yes and no, because the BVI is relatively new to the financial scene of the place. So I think we're still learning, but I think so far we're getting there.
Okay, okay. And with us keep on trying to get better at financial services, there are of course other things that we can do, which is to mirror some of what the other jurisdictions are doing, provided that it works for all products and services as well. Now, sometimes it may appear to some jurisdictions that the BVI may or may not be complying with what they consider to be best practice principles. But in actuality, the BVI, as far as we can see, has been taking steps to basically try to ensure that it is complying with international best practice standards. So with that, do you think that perhaps the BVI's standing on the global financial services industry could actually be raised if we were to expand perhaps our products and services? Brent, what are your thoughts on that?
Well, when you say expand in what terms?
Like we're trying to raise our rankings so that we would be seen as not just the number one incorporated companies, but perhaps maybe a viable competitor in insurance services or any of those other type of financial services.
Well, yeah, I do think that we should look into raising our bar and further venturing into different sectors within the financial industry. And I think that starts with the schooling. If more programs were available to students, I think that students or own people of the learning islands could get into these fields and further help us advance the sector.
You raise a rather valid point there. Do you guys think that if perhaps financial services was taught as a specialized subject in secondary schools, that it would have helped your understanding of it here at the college? What are your thoughts on that?
I strongly agree with that. I believe it would have strengthened the understanding and also the interest in financial services.
Okay. And so you guys have basically been at the college for 2 to 3 years, roughly, depending on your program of study. Do you find as well that the courses which the college currently has available, do you find that those are preparing you sufficiently, you think, for the work world? Are you getting sufficient exposure, or Or do you think that perhaps if there were some internships that would actually help to give you a better feel, a better understanding of the expectations of the industry?
Well, I think right now at the college we're doing a lot of theory and not a lot of practical. So while we are learning the information, we're not really putting it into practice. So we're not, even though we're learning the information, we don't know how to apply it to the real world because we didn't get that experience. So I think if we implemented a practical element to it, we would be better off.
Okay. And do you think that if perhaps the college's programs were more interactive with perhaps professionals in the industry, do you think that that would also help to broaden your horizons and your understanding of the various areas?
I don't think so.
Okay, you care to expand on that just a bit more?
Well, given the experience of this financial exports, it would be beneficial to us, if they were to impact their knowledge on it.
Okay. And when it comes to the documents which are used in the financial services industry, the different contracts, maturity periods, and the understandings, what do you think that you could benefit from it? Those types of discussions, Janine, as a student, that is.
I think I can benefit from those types of area, like within the college, by them tweaking the class, the syllabus a bit, to not only offer like 2 US-based or UK-based subjects, but bringing that right back home to applying it right there in the BBA instead of just offering UK-based or US-based examples.
Okay, I see. And so if they were to actually offer a threefold base, meaning bringing in information from other jurisdictions, comparison and contrast type setting, do you think as well that that may not only benefit the BVI, but also the other Caribbean jurisdictions which are looking to have financial services as perhaps one of their main economic pillars? And what are your thoughts on that?
I believe that it can benefit everybody because although in the BVI we're said to depend on the UK, it's a UK overseas territory, we're still in the Caribbean, so being able to exchange that information with the other Caribbean countries, the other economies, it will help everybody in the long run.
Okay. I'm happy that you said that because immediately my mind took me to the Eastern Caribbean Central Bank and the type of functions that they have, which are pretty much similar and in line with what the Federal Reserve may have, or perhaps what any other central bank actually has, which is the control of monetary policy within the country. So with that, do you think that if, let's say, these experts were to share their knowledge with us, the BVI, although we don't have a central bank, do you think that that would help for the various government organizations to perhaps refine their services a bit more? Like we would basically be learning from our neighbors. Do you think that would be helpful for us as a jurisdiction?
That depends on what our goals are. If we are trying to move towards having an economy like theirs own, then it could be beneficial. But I would say it all depends on what our goals are as a country.
Okay, so essentially we need to identify ourselves as a specialist country perhaps, or have clear goals, as you said, of exactly what we want to achieve, correct? Okay, that is good. Now, shifting the conversation a bit, let's talk about those persons who may be interested in investing or utilizing any of the products or services in the BVI. Do you think that for the wide wealth of knowledge out there with cryptocurrencies, digital currencies, as the case might be, or all of these different jargons which are being used across the various subject areas, do you think that there is hope for us to be able to educate the BVI public about some of these things and help them to also maximize the yield on their investments just through simple conversations?
I would say, as we mentioned earlier, with the schooling, I think if they started teaching it in school at an earlier stage, then everybody would have like a general knowledge of how to go about things. So they did it, let's say for example, let's say that if they learn from an earlier stage, they would know like direction where to go in terms of investing and stuff. Whereas somebody who didn't get that the prior knowledge is basically lost as to what to do. They don't have a clear path as to how to go about investing. So I think teaching earlier would be a good solution or a start.
Okay, okay. And I think that the BVI Financial Services has taken a greater understanding towards the need to educate the public. So they've actually set up this which is, I think, it's Money Matters, which would help the general populace to understand simple things that may be taken for granted with how to make your money work for you. So I think that that would actually be a good way to help us. Now, with the war occurring in Russia, Ukraine, all of these sanctions, do you think that that may actually be putting a bit of a dent in financial services, not just in the BVI, but around the world? What are your thoughts?
I do think that that war is putting a dent in the financial service industry, but not only in the BVI, but around the world, because those countries that used to benefit from Russian and Ukraine customers coming in and purchasing and doing transactions with them, they are no longer benefiting from that because of the sanctions that are put in place. So they're not benefiting from that revenue, as well as other aspects that other products that may come from that area. They may have to go to different countries or seek different resources from other countries. So that is definitely putting a dent or an effect on the financial service industry in those areas.
Okay, okay. So basically, we're seeing that even though our jurisdiction may have its own products and services, it is still tied into the global economy.
Yes.
Whatever happens around the world affects us, whether indirectly or directly. So therefore, it's very important as students, as persons who are interested in possibly investing or even doing business in general, that we keep an eye on the news and that we stay informed about what's happening. If you take a look at gas, for instance, we never thought that we would be paying the prices that we're paying now. So that budget that you had in place for your gas being $40 before, it's now almost $80. So that means that we have to realign the way that we think, the way that we prepare ourselves for the inevitable, because it may just get worse. So if we are going to basically pass on good information to the future generations, what would you say is one thought that you would share with them from a Money Matters perspective that you hope that they will be able to take away, at least from this discussion? Brent, I'll start with you.
Honestly, even though you never know your schooling situation, you can't dictate what you will learn in school, but you can dictate where you get your knowledge from. And in today's generation, we have numerous sources of information that you can go and receive yourself. There's YouTube, there's Google. So I would suggest doing your own research and just learn how to invest and make sure that you don't just put all your eggs into one basket, but you try to learn a bit of everything, so you'll be better off in the long run.
Okay, thank you. Janina?
I would tell them that you should start to manage your money from a young age and not just spend your money on everything you do. So you have to put aside a certain percentage of your income for a rainy day, because you might never know what the economy is looking like or what your life is looking like in the future. So you have to put aside something so that you can fall back
online with my classmates, like what Brent said. There's so many sources of information nowadays. You you have the ability to go out and do your own research, get your own information. There's no true reason for you to say that you don't fully know something because it's right there at your fingertips to go and do your research. In terms of what Janina said with managing your money, just like sometimes how you've mentioned in class that investing is important, always try to start some form of investment because you never know what can happen. You always want to leave some, you want to have some backup. You want to allow your money to grow because, as Janina said, you never know what may happen. So it's some form, it falls as some form of contingency plan in case something bad goes. Something bad happens.
Okay. And Matthew?
Well, I'm also in agreement with my fellow classmates in the sense that, as Bernie said, you can't put all the eggs in one basket. And, well, that's diversification, of course. So, as she said, with a rainy day, for instance, with Irma, when it passed, a lot of people didn't set aside money because they weren't prepared for it. And I think that's lack of knowledge on their part. Well, not really lack of knowledge, but they didn't expect. So I think once people start expecting more and start putting like proper procedures in place in the event of anything, then they will. So while you say I don't think you should just save the money, but invest it in a way that you can like make more money on that. Because if say you're working for somebody and they decide that they want to lay you off, and for whatever reason, it would be good to know that you have another form of income, so you're not just reliant on that one source of income.
Okay, good. So we have some key terms here, which are preparation, investing, diversification, considerations. There's just one final bit that I would like to put in, which is basically to ensure that you're having casual discussions. Do not be fearful to sit with a classmate or family member, or even just to call your bank and talk about the type of services that they offer. You may be surprised that bit of information may actually be what helps for you to make more money or for you to know about other business opportunities that are there. Sometimes too, you can even interact with the various government departments. There's some grants that are being made available for certain businesses. You can capitalize on that. So sitting at home, hoping that your 9 to 5 salary will get you where you want to be, to that castle on the hill, it may occur, but then it may not. So you need to ensure that you have placed yourself in such a position that you feel a little more confident in what you're doing. You feel a little more confident in preparing the future for your children, for your friends, your family members, and for yourself. And with that, we would like to thank you all for participating and tuning in. You have been listening to Conversations in Financial Services presented by the Business 243 Financial Services Markets and Institutions class. And we are here at the H. Laverty Stout College Memorial section. Thank you and enjoy the rest of your evening.